Can you really make money with a small Forex trading account? This is part 2 of that subject. Let's get into it right now. Hey traders, Andrew Mitchem here with video and podcast number 295, and this is following on from last week's video and podcast, which was all about can you really make money with a small Forex account. That was part 1. Today this is part 2. So following on from last week's video, the main thing from that you would have gained from that information is it doesn't matter really what the size of your account is. You have to learn how to be profitable. And that really doesn't matter whether your account is $100 or it's $1 million. If you can't be profitable and you don't have a strategy, you don't have a system, you're not consistent, you're not disciplined, it really doesn't matter what the size of your account. And on last week's video and podcast, I gave some examples about how you can grow the size of your account from other sources of income, from selling signals, from trading from friends and family possibly. But there are other ways you can increase the size of your trading account right now. And of course, the best way is to make gains on your account. But if you're not profitable, the rest of it doesn't matter. So what can you do to be profitable? Well, one of the things that I find so many people still fail to understand is they count their success or their failure in the number of pips they make. Now, just yesterday, I held a 1.5 hour live webinar, free to the public webinar. Never once did I mention how many pips I've made or have lost. Doesn't matter, completely irrelevant. The only time I use pips is when I'm looking at taking a new trade and I'm calculating my position size needed, and that's according to the stop loss in pips that I'm taking on a trade, and it's according to the risk I want to take, and it's according to the currency pair I'm trading. So yes, I use pips in terms of I'm risking X number of pips on this trade, but don't forget a stop loss should never have a fixed number of pips. Just because I'm trading the British pound US dollar on a 1 hour chart doesn't mean to say I only use 20 pips as a stop, let's say. It doesn't matter. The stop loss needs to be in the place that it needs to be for the protection of that individual trade, regardless of its currency pair, regardless of the time frame that you're trading, because the market moves in different amounts. So what might be good last week on a trade on a 1 hour chart may be very different from the market conditions right today. So yes, I need to know how many pips my stop loss is, but it doesn't mean to say, let's say it was 20 pips. It doesn't mean to say and the trade goes wrong. It doesn't mean to say I'm going, oh, I've just lost 20 pips. It doesn't matter. I'm losing X% of my account. But also you can use that to your advantage, because of course we want high reward to risk trades. So let's say that your profit target just happened to be 60 pips for easy calculation, 20 pip stop loss, 60 pip profit target. That gives you a 3-to-1 reward to risk trade. If it hits the profit, I don't make 60 pips. It doesn't matter to me that I've made 60 pips. What it does matter to me is that I made a 3-to-1 reward to risk trade. For ease of numbers, let's say I risk 1% on that trade. If the trade goes wrong, I lose 1%. Because it's made a 3-to-1 reward to risk trade and it hits the profit target, I've now made a 3% gain. I actually use a 0.5% rule, but that's what suits me. So 0.5% risk on that trade means I make a 1.5% gain on my account. So it's really important that you forget to actually counting your success or failure in pips. Have high reward to risk trades. Can I trade a bigger time frame chart with a small account? Most people think they cannot, but of course you can. It doesn't matter that your stop loss on a daily chart might need to be 80 pips, it might need to be 135 pips. It doesn't matter, because it all comes down to having the correct position size for that individual trade. You're still risking the same amount, whether it be that 1 hour time frame chart with a 20 pip stop loss or a daily chart with an 80 pip stop loss. The only thing that changes is your position size. Your risk is still the same. Let's say that you had an 80 pip stop loss on your daily chart and you had a 240 pip profit target. It's still a 3-to-1 reward to risk trade. Same amount of risk, same amount of reward. So therefore you can trade longer time frame charts. Don't get caught into thinking that just because your account might be small, that you therefore can only trade 15-minute time frames or 5-minute charts. Forget that. You can trade any time frame chart regardless of your account size. You just need to adjust the position size. And if your account is really small, then go to nanolots instead of microlots, and you can then trade accurately again. So any time frame chart, I personally prefer the higher time frame charts, any currency pair, any direction. What type of trader do you want to be? Do you want to take continuation trades or reversal trades? I personally take both. Time frame charts, look at the higher time frame charts. So all those type of things can really help you. Now, just because your account is small doesn't mean to say that you cannot trade exactly the same as someone with a $10,000 account or a $100,000 account, because treat it like it's real. Don't go, oh, my account's just $500, therefore it doesn't matter if I lose. Or I'm gonna just leave the trade open over the weekend and if it loses, who cares, it's just $500. Do not trade that way. Every trade should be there with your checklist. Has it met all these criteria, yes or no? If it has, great, take the trade, manage the trade, or put your stop loss in place to protect your position. So you have to treat your account real, regardless of if that size of the account is small or large. It's very important that you do that. So that's pretty much covered the things that you need to know. Can you make money as a small-time Forex trader? Absolutely you can. Look at how much you're making as a percentage gain. How much am I risking? How much am I making? Because if you make, let's say, a 20% gain in 6 months on your $1,000 account, don't just look at that and go, that's just $200, it's pointless. Look at that as a 20% gain in 6 months. How incredible is that? That's a massive, massive gain. So think of it in terms of a bigger picture. Think of it in terms of global scale. Or go to your bank and find out how much they're going to pay you in 6 months for a term deposit. You know, it's probably 1%. You know, you've just made 20%. Think of it that way. That's how you make money as a small-time trader, because you have to learn how to trade properly first. So I hope that helps. Now, one thing that I'd like you also to do before you finish is have a look at my homepage. There's an interview there with a client of mine from Toronto in Canada called Emery Gams. It's an amazing interview from someone who started in the corporate world, who gave up the rat race to learn to trade Forex and is now trading full-time. I really urge you to spend 30 minutes, watch through that video. It is fantastic. It's on my homepage. I'll also put a link to it below this video and podcast. So once again, this is Andrew Mitchem from the Forex Trading Coach. I'll see you this time next week. Bye for now.